Imagine a new type of gold rush, but instead of digging in the dirt, it's all done online. That's essentially what crypto mining is all about. Powerful computers solve complex problems to create new cryptocurrency units like Bitcoin. The winner gets rewarded with a brand new shiny Bitcoin. These coins hold real-world value, just like gold. People are buying, selling, and trading them every day. Mining ensures the security and integrity of the entire cryptocurrency system. This new form of digital gold is changing how we think about money and finance. But instead of pickaxes and shovels, you need powerful computers and a good understanding of how cryptocurrencies work. Imagine a giant digital ledger that keeps track of every single cryptocurrency transaction ever made. That's the blockchain. Miners verify and add new transactions to the blockchain. It's a continuous 24/7 operation. Think of it like a giant tamper-proof spreadsheet. Miners solve complex problems to add blocks to the blockchain. This process requires a lot of computing power and energy. The more people that mine, the more secure the network becomes. It's a self-regulating system relying on a distributed network. So, how do you get in on this digital gold rush? Well, there are a few ways. You could become a miner yourself, but that requires significant investment in hardware and electricity. Or you could invest in companies at the forefront of this technological revolution. Companies that are developing the infrastructure, hardware, and software that make crypto mining possible. Investing in these companies is like investing in the picks and shovels during the gold rush. You're not directly mining for gold, but you're providing the tools that others need to do so. And as the demand for cryptocurrencies continues to grow, so too will the demand for these tools. But remember, just like any investment, there are risks involved. The value of cryptocurrencies can be volatile and the regulatory landscape is still evolving. It's crucial to do your research and understand the potential risks before investing any money. Throughout this essay, we'll explore the fascinating world of crypto mining, examining its inner workings, its impact on the environment and economy, and most importantly, the top companies poised to shape the future of this exciting new industry. So buckle up and let's dive into the exciting world of crypto mining. At the heart of crypto mining lies blockchain technology. Imagine a digital ledger recording every transaction. This ledger is duplicated across a vast network. Each block contains transactions and is permanent. Miners solve complex problems to add blocks. This process ensures transaction validity and security. Think of it like a giant Sudoku puzzle, where everyone is racing to find the solution. The first one to crack the code gets the prize. This method, known as proof of work, requires miners to expend significant computational energy to solve the puzzle. This energy expenditure serves a critical purpose. It makes it incredibly difficult and costly for malicious actors to manipulate the blockchain. To successfully alter a transaction, they would need to control a majority of the network's computing power, a feat that's practically impossible given the decentralized nature of most cryptocurrencies. The difficulty of these mathematical problems is adjusted regularly to maintain a consistent block creation time. For example, if more miners join the network, the difficulty increases, ensuring that blocks are still added at the desired rate. This self-regulating mechanism is another fascinating aspect of blockchain technology. As miners compete to solve these complex problems, they're essentially racing to secure the network and validate transactions. This competitive process is what keeps the blockchain secure and trustworthy. Every successful block added to the chain strengthens the integrity of the entire system. Now, imagine thousands of these miners all working simultaneously to solve these complex problems. It's a race against time, and the rewards are significant. But as more miners joined the network, the difficulty of mining increased exponentially. Individual miners, even with powerful computers, found it increasingly challenging to compete. This led to the emergence of mining pools. In a mining pool, individual miners combine their computing power, sharing resources to increase their chances of solving a block and earning rewards. It's like a group of lottery players pooling their money together to buy more tickets, increasing their odds of winning. When a mining pool successfully mines a block, the rewards are distributed among the participants based on their contributed processing power. This collaborative approach allows smaller miners to participate in the network and earn rewards that would be impossible to achieve individually. Mining pools have become a dominant force in the crypto mining industry. They offer a more consistent and predictable stream of income for miners, reducing the volatility associated with solo mining. However, it's important to note that joining a mining pool also means sharing a portion of the rewards with the pool operator. But as more miners joined the network, the difficulty of mining increased exponentially. The computational power required to solve these complex mathematical problems grew, leading to an arms race for more powerful and efficient mining hardware. Initially, miners used high-end gaming PCs with powerful graphics processing units, GPUs, to mine cryptocurrencies. However, as the difficulty increased, a new type of hardware emerged: application-specific integrated circuits, ASICs. These specialized chips were specifically designed for mining cryptocurrencies, offering significantly higher hash rates, computing power, and energy efficiency compared to GPUs. The introduction of ASICs revolutionized the crypto mining industry. They allowed miners to significantly increase their hash rate, giving them a competitive edge in the race to solve blocks. However, ASICs also came with a higher price tag, making it more expensive for individual miners to compete. This shift towards specialized hardware further intensified the need for mining pools. By pooling their resources, miners could afford to invest in the latest ASIC technology and remain competitive in the ever-evolving landscape of crypto mining. The demand for power led to the rise of mining farms. These large-scale operations house thousands of ASIC miners. Mining farms are the backbone of the crypto mining industry. They play a crucial role in securing networks and validating transactions. However, their rise raises concerns about centralization. The balance of power between mining farms and individual miners will be interesting to watch. But all this computing power comes at a cost, a significant environmental cost. Crypto mining, particularly proof-of-work mining, consumes vast amounts of electricity. The energy required to power these mining operations often comes from fossil fuels, contributing to greenhouse gas emissions and climate change. This environmental impact has become a major point of contention for critics of cryptocurrencies. They argue that the energy consumption associated with mining outweighs the potential benefits of blockchain technology. However, it's important to note that the environmental impact of crypto mining varies depending on the energy source used. In regions with access to renewable energy sources, such as hydropower or geothermal energy, the environmental footprint of mining can be significantly reduced. Many in the crypto industry are actively seeking solutions to mitigate the environmental impact of mining. This includes transitioning to more energy-efficient mining hardware, exploring alternative consensus mechanisms that require less energy, and investing in renewable energy sources to power mining operations. As the industry matures, addressing the environmental concerns associated with mining will be crucial for its long-term sustainability and widespread adoption. Now let's talk about the elephant in the room. The environmental impact of crypto mining. It's no secret that mining cryptocurrencies, especially Bitcoin, requires a tremendous amount of energy. Those powerful computers whirring away 24/7 need a constant supply of electricity to solve those complex mathematical problems. Think about it. Millions of miners worldwide are competing to solve these puzzles, each consuming as much energy as a small city. It's like having a global network of power-hungry machines, all vying for the same digital prize. This energy consumption has sparked fierce debates about the sustainability of cryptocurrencies. Critics argue that the environmental cost of mining outweighs the potential benefits of blockchain technology. But it's not as simple as saying crypto mining is inherently bad for the environment. The reality is far more nuanced. The environmental impact of mining depends heavily on the source of energy used. To put things into perspective, the Bitcoin network alone consumes more electricity annually than some entire countries. That's a staggering amount of energy, and it's only natural to question whether it's justifiable. The majority of this energy consumption is concentrated in regions with cheap electricity, often derived from fossil fuels. This reliance on carbon-intensive energy sources is a major concern for environmentalists. However, it's crucial to remember that not all cryptocurrencies are created equal. Bitcoin, with its energy-intensive proof-of-work consensus mechanism, is often singled out for its environmental impact. Many newer cryptocurrencies utilize alternative consensus mechanisms, such as proof-of-stake, which require significantly less energy. These alternatives offer a more sustainable path forward for the crypto industry. The reliance on fossil fuels for crypto mining is a major contributor to its carbon footprint. When fossil fuels are burned to generate electricity, they release greenhouse gases into the atmosphere, contributing to climate change. In regions heavily reliant on coal-fired power plants, the carbon emissions from crypto mining can be substantial. This has led some to argue that cryptocurrencies are incompatible with a sustainable future. However, it's important to note that the energy mix used for crypto mining is constantly evolving. As renewable energy sources become more affordable and accessible, we're seeing a shift towards greener mining practices. Many mining operations are now setting up shop in regions with abundant renewable energy sources, such as hydroelectric power or geothermal energy. This transition to cleaner energy sources is a positive step towards reducing the environmental impact of crypto mining. The good news is that the crypto industry is becoming increasingly aware of its environmental responsibilities. Many players in the space are actively seeking solutions to mitigate the environmental impact of mining. One promising avenue is the development of more energy-efficient mining hardware. As technology advances, we're seeing the emergence of ASIC miners that offer significantly higher hash rates while consuming less energy. Another approach is exploring alternative consensus mechanisms that are less energy-intensive. Proof of stake, for example, relies on validators who stake their cryptocurrency holdings to validate transactions, eliminating the need for energy-intensive mining. Furthermore, there's a growing movement within the crypto community to invest in renewable energy sources to power mining operations. By directly supporting the development of solar, wind and hydroelectric power, the industry can reduce its reliance on fossil fuels and pave the way for a more sustainable future. But the impact of crypto mining extends beyond the environment. It also has significant economic implications, both positive and negative. On the one hand, mining creates jobs and stimulates economic activity. Mining farms, for example, require skilled workers to operate and maintain their equipment. The demand for mining hardware also benefits manufacturers and suppliers in the tech industry. Moreover, crypto mining can provide an additional source of income for individuals, especially in regions with limited economic opportunities. By participating in mining pools, individuals can earn cryptocurrency rewards, providing a potential pathway to financial inclusion. However, crypto mining can also have negative economic consequences. The high energy consumption associated with mining can drive up electricity prices, particularly in regions with limited energy infrastructure. Some argue that crypto mining could actually accelerate the transition to renewable energy sources. The demand for cheap and abundant energy incentivizes miners to seek out regions with favorable energy policies and access to renewable resources. This in turn could drive investment in renewable energy projects, benefiting both the crypto industry and the broader economy. Furthermore, the decentralized nature of cryptocurrencies could empower communities to take control of their energy production and distribution. Imagine a future where local communities generate their own renewable energy and use it to power their homes, businesses, and even crypto mining operations. While this vision may seem far-fetched, the potential is there. Crypto mining, with its insatiable appetite for energy, could ironically become a catalyst for a more sustainable and decentralized energy future. Now, let's get down to brass tacks and talk about the companies leading the charge in the crypto mining industry. These are the companies at the forefront of this technological revolution, developing the infrastructure, hardware, and software that make crypto mining possible. Investing in these companies is like investing in the picks and shovels during the gold rush. You're providing the tools that others need to mine for digital gold. As the demand for cryptocurrencies continues to grow, so too will the demand for these tools, potentially leading to significant returns for savvy investors. However, it's crucial to remember that the crypto mining industry is still in its early stages. It's a volatile market, influenced by factors such as cryptocurrency prices, regulatory changes, and technological advancements. As with any investment, it's essential to do your research, understand the risks involved, and diversify your portfolio. The following companies are just a starting point for your research. They represent a mix of established players and emerging contenders, each with its unique strengths and challenges. First on our list is Marathon Digital Holdings, one of the largest Bitcoin mining companies in North America. This company has strategically positioned itself to capitalize on the growing demand for Bitcoin by aggressively expanding its mining operations. Marathon operates massive mining farms equipped with thousands of state-of-the-art ASIC miners, giving them significant hashing power and allowing them to mine a substantial amount of Bitcoin. They are known for their focus on efficiency, constantly upgrading their equipment to stay ahead of the curve in the ever-evolving world of mining hardware. One of Marathon's key strengths is its commitment to renewable energy. They have partnered with Beowulf Energy to power their mining operations in Texas with wind and solar power, significantly reducing their carbon footprint and appealing to environmentally conscious investors. As a publicly traded company, Marathon provides investors with transparency and liquidity. Their financial performance is closely tied to the price of Bitcoin, making them a leveraged play on the success of the leading cryptocurrency. Next up, we have Riot Blockchain, another major player in the North American Bitcoin mining scene. Like Marathon, Riot has invested heavily in building out its mining infrastructure, boasting a large fleet of ASIC miners and strategic partnerships with energy providers. Riot distinguishes itself through its vertically integrated approach. They own and operate their own mining facilities, energy infrastructure, and even an electrical engineering company. This in-house expertise allows them to optimize their operations for maximum efficiency and cost-effectiveness. Riot is also actively involved in shaping the future of the mining industry. They are investing in research and development of next-generation mining technologies and advocating for policy changes that support the growth of the industry. As a company with a strong track record of growth and a forward-thinking approach, Riot Blockchain presents an intriguing opportunity for investors seeking exposure to the Bitcoin mining sector. Venturing further into the world of sustainable mining, we have Hive Blockchain Technologies. This company stands out for its commitment to using 100% green energy to power its mining operations. Hive operates mining facilities in Iceland and Sweden, taking advantage of these countries' abundant hydroelectric and geothermal energy resources. This focus on renewable energy significantly reduces their environmental impact, positioning them as a leader in sustainable crypto mining. Hive mines a diversified portfolio of cryptocurrencies, including Bitcoin, Ethereum, and Ethereum Classic. This diversified approach helps to mitigate risks associated with the volatility of individual cryptocurrencies. As a company at the forefront of the green mining movement, Hive Blockchain Technologies offers investors a way to participate in the crypto mining industry while aligning their investments with their environmental values. Staying in the North American region, we have Hut 8 Mining, a Canadian company with a strong focus on Bitcoin mining. Hut 8 operates 2 mining facilities in Alberta, Canada, powered by a combination of natural gas and renewable energy sources. What sets Hut 8 apart is its commitment to transparency and shareholder value. They provide regular updates on their mining operations, including their hash rate, energy consumption, and Bitcoin holdings. This high level of transparency has earned them a loyal following among investors. Hut 8 is also actively exploring opportunities in the Web3 space, investing in blockchain gaming and decentralized finance projects. This forward-looking approach positions them to capitalize on the growing convergence of blockchain technology and other emerging industries. For investors seeking exposure to a well-established Bitcoin mining company with a strong track record of transparency and a vision for the future, Hut 8 Mining is worth considering. Last but not least, we have Bitfarms, a Canadian company with a unique approach to Bitcoin mining. Bitfarms focuses on operating its mining facilities in regions with low-cost hydroelectric power, primarily in Quebec, Canada. This strategic location allows them to access some of the cheapest and cleanest energy in the world, significantly reducing their operating costs and environmental footprint. Bitfarms is known for its efficient operations and impressive growth trajectory. They have consistently increased their hash rate and Bitcoin production, establishing themselves as a major player in the industry. Their vertically integrated business model, which includes owning and operating their own power substations, gives them greater control over their energy costs and ensures a reliable supply of electricity to their mining operations. For investors seeking exposure to a Bitcoin mining company with a strong focus on cost efficiency, sustainability, and a proven track record of growth, Bitfarms presents a compelling opportunity. As we've journeyed through the intricate world of crypto mining, from the complex algorithms that secure the blockchain to the massive mining farms that power the network, one thing is clear: this industry is still in its early stages of development. Just like the early days of the internet, the future of crypto mining holds immense potential but also uncertainty. The environmental impact of mining will undoubtedly continue to be a major focus in the coming years. As we've discussed, the industry is already taking steps to embrace renewable energy sources and develop more energy-efficient mining technologies. This shift towards sustainability is crucial for the long-term viability and acceptance of cryptocurrencies. Another key trend to watch is the evolution of mining hardware. The race for more powerful and efficient ASIC miners is far from over. We can expect to see continued innovation in this area, with new generations of miners pushing the boundaries of computational power while consuming less energy. Furthermore, the regulatory landscape surrounding crypto mining is still taking shape. Governments worldwide are grappling with how to regulate this emerging industry, balancing innovation with consumer protection and ensuring a level playing field for all participants. However, remember that the crypto landscape, with its inherent volatility and unpredictable nature, demands a cautious and informed approach to investing. Before diving headfirst into any crypto mining stock, it's essential to conduct thorough research, understand the company's financials, assess their management team, and evaluate their long-term strategy. Don't be swayed solely by hype or short-term market fluctuations. Instead, focus on identifying companies with a solid track record, a commitment to innovation, and a clear vision for the future of the industry. Diversification is also key when investing in the crypto mining sector. Just as you wouldn't put all your eggs in one basket, it's wise to spread your investments across multiple companies to mitigate risks. Consider investing in companies that focus on different aspects of the mining ecosystem, from hardware manufacturers to mining pool operators, to companies developing sustainable mining solutions. The world of crypto mining is not just about Bitcoin. As the broader cryptocurrency market expands, we can expect to see increased demand for mining services across a wide range of cryptocurrencies. Companies that can adapt to this evolving landscape and provide mining solutions for a diverse portfolio of cryptocurrencies will be well positioned for future growth. Moreover, the underlying technology behind crypto mining, blockchain technology, has the potential to revolutionize far more than just finance. From supply chain management to healthcare to digital identity, the applications of blockchain are vast and still being explored. Investing in crypto mining companies could provide exposure to not only the growth of the cryptocurrency market, but also the broader adoption of blockchain technology across various industries. As we stand on the cusp of this technological revolution, one thing is certain: the future of crypto mining is full of possibilities. By staying informed, approaching investments with caution and a long-term perspective, and embracing the spirit of innovation that drives this industry, you can position yourself to potentially benefit from the exciting opportunities that lie ahead.